Hello, everyone. Nice to be joining this Mitigram podcast. My name is André Casterman. I'm an independent consultant in the Fintech space. I've been on the Fintech activity since 30 years, first working at Swift on combining technologies for financial institutions between 91 and 2015, and since early 2016, active in with various fintechs in payments, trade finance, digital assets. So delighted to be here and sharing some thoughts about where we're going with technologies, particularly in trade finance, and looking at how those technologies can be adopted by financial institutions to the benefit of their clients and their institutional partners. So two market trends I'd like to highlight that I'm busy working on, of course, these days, is first the model law for electronic transferable records, which is a reference, a legal text that acts as a reference for countries to adopt and as part of their local laws, and that enables basically financial institutions to use electronic solutions for digitizing additional trade flows. So that's one trend I'd like to focus on. The second one is around the trade finance funds that are entering the trade finance activities are as new originators. So first, let's look at the MLETR. So that legal reference text was created in 2017, or at least published, finalized in 2017, and basically has been adopted already by some countries like Bahrain, Singapore, Abu Dhabi Global Market, and now the UK as well, in order to basically enable financial institutions and their counterparties to digitize negotiable instruments. What we mean by negotiable instruments is mainly around demonstrating that a particular electronic document is actually owned, is a title document, is owned by one party, and that the possession of that document means indeed ownership, and or the physical possession means ownership, and that the physical transfer of the document means indeed transfer of the title of the instrument. It could be around, a bill of lading, a bill of exchange, a promissory note, or additional ones like warehouse receipts. It's quite a timely development because we haven't been able in the market as an industry to develop those instruments over the last 2 decades. There has been a few attempts, but the market basically has not scaled on regarding the digitization of those trade documents, in particular negotiable instruments like the ones I mentioned. So it's very important to combine basically the legal developments, which are around the alignment with the MLETR legal reference text, and align those legal developments and regulatory decisions, policy decisions with new technologies. And this is where new technologies such as JSON schemas, electronic signatures, distributed ledger technology, when assembled in the right way, can achieve the purpose of demonstrating exclusive ownership of an electronic record and the digital transfer of ownership of that electronic record from one party to the other. And that's really what so far we haven't been able to achieve in a very interoperable way. We have seen platforms around bills of lading. We have seen different ecosystems trying to digitize documents, but not in a way that is required. That means in a fully interoperable way without requesting parties to connect to a common platform. So that is a key development. We expect the UK to align with MLETR by mid-2022. And that will be a role model decision that will have ripple effects around the world, because of course the English law is key for international trade, supporting a majority of international trade flows, and that means not only UK banks but also their counterparties will be able to benefit from this change, and bills of exchange, bills of lading, promissory notes will be able under English law to move to digital options. So watch this space, I would say. We are definitely working on this through the D&I initiative that I will expand a bit on later. Another major trend are those non-bank financial institutions that we can refer to as trade finance funds. They are basically complementing what banks are doing in the market and trying to bring additional liquidity to mid-caps and SMEs. There are different ways to achieve this, but definitely we see some focusing more on buyer-based approved payables. Others are more focusing on exporters, but definitely we see more and more that institutional funding is getting to corporates in a direct way in the primary space through those what I would call non-bank originators. They are financial institutions, they are supervised, and they're bringing new liquidity to those mid-caps and SMEs primarily, not really to the blue chip companies that the banks are serving very well today. Some of those funds also are active in the secondary market, and then they bring liquidity to originators themselves. So sometimes they're working on both primary and secondary market, but I think a major trend here is around those who have started to work on the primary space, bringing this liquidity, including sometimes retail liquidity, to the mid caps and the SMEs. So two market trends: MLETR, trade finance funds, and definitely a lot of industry talk and industry developments we can cover in future podcasts around those two trends. What's in it for Mitigram? Actually, Mitigram decided in 2021 to join the International Trade and Forfaiting Association's D&I initiative, Digital Negotiable Instrument Initiative. And this is the community of those firms, technology firms, financial institutions, corporates, and law firms that are really developing expertise around the MLETR and that are engaging through partnerships, through educational sessions as well, to spread the use of MLETR compatible laws and instruments and technology innovations to the wider market. So the D&I initiative is something I had the pleasure to set up through the ITFA Fintech committee in mid-2019. And our goal was definitely to demonstrate how highly specialized technologies are able to achieve what MLETR achieves from a legal perspective. So really combining again the use of technology and the use of new legal options. Mitigram is integrating that such new technologies, and the one that we have selected on the ITFA side is the one of Enigio with Trace Original that achieves this MLETR ability from a technology perspective, of course. And by integrating the Enigio Trace Original technology, Mitigram enables basically its users, financial institutions and corporates, to exchange electronic original files, documents, instruments in a fully interoperable way. That means that document created by corporate or by bank on the Mitigram platform can end up with another counterparty, another bank, for instance, over the SWIFT network if needed, without the need for that other counterparty to be on the Mitigram platform itself, if that is not applicable to them. So interoperability is definitely the goal here, and that is achieved through the use of distributed ledger technology. So that's a key development for Mitigram in terms of bringing the benefits of MLETR compatible laws and instruments to the existing customer base, so the banks and the corporates that are using Mitigram today. Also on the second market trend we discussed, trade finance funds, for Mitigram, that's also an important market trend, as those funds can engage with corporates in through Mitigram and finding mid-caps primarily, but could be also some SMEs that are looking for new funders, and where the MITI Square enables parties to find each other and to bid on transactions. So corporates looking for pricing offers, pricing quotations from financial institutions, whether we're talking about incumbent banks or new originators like the trade finance funds. So those market trends, the MLETR and the trade finance funds I have introduced, are actually relevant for Mitigram and are opportunities for financial institutions to indeed engage with the wider market in a fully digital way. Finally, I'd like to also talk about something that is a bit more for the future, but hopefully will impact us positively as well. This is about embedded finance. We have seen over the years that banks have created a lot of ecosystems. I've worked myself at Swift for 24 years, and that's a brilliant ecosystem, a highly cooperative one, where banks work together to standardize financial messaging, and this has been going on since almost 50 years now, as Swift was created in 1973. And what we see in the future is that banks-owned ecosystems are not necessarily the best way forward. What I mean is that with embedded finance, we have an opportunity now for banks to integrate supply chain ecosystems. And with that, I mean the logistics world, the corporate world is creating its own ecosystems where transactions are being indeed digitized, where trade assets are actually existing, bills of lading are created in those ecosystems. And the challenge, and certainly the opportunity for banks more and more, will be to integrate those ecosystems rather than trying to get those ecosystems to integrate banking ecosystems. So embedded finance is about the financial ability, the funding, the risk cover, the financial services that banks and funds offer to integrate that capability into those supply chain ecosystems. I'm thinking about, B2B platforms that are integrating credit insurance, funding for receivables. And this is very much like you integrate an insurance into a retail portal. You have also logistics companies like DP World, which is a Dubai-based logistics company, global company, DP World, that is managing logistics around the world. They see the physical supply chains, and now more and more with DP World Financial Services and their Cargo ES innovation, they're linking and inviting funders to get access to those transactions that require funding. And obviously, the goal is to fund SMEs. So embedded finance is a concept that I believe in trade finance, whereby rather than indeed getting the logistics space to connect to bank-owned ecosystems, we should think about helping the banks to integrate logistics ecosystems in the same way as this has been applied on retail e-commerce market spaces. So it's a major opportunity for banks, and what will be attractive for banks, besides the ability to tap into large pools of transactions, is the fact that those logistics ecosystems have visibility on real economy flows, tracking those flows, and being able to basically fight fraud. Because they see that the shipments definitely exists. This is not a fake bill of lading, because they operate the ships, or they are part of the ecosystems of ports that where the ships are going. So the opportunity for banks is definitely to get closer to the physical supply chain, and thereby avoiding some fraud issues we have witnessed so far. So we have talked about two key market trends: MLETR, trade finance funds, how Mitigram can benefit from those, and going forward, how it is important for banks to clearly get closer to logistics and supply chain ecosystems and apply what the industry calls embedded finance to their benefit and the benefit of SMEs, and hopefully close the trade finance gap. Thank you very much. Looking forward to additional sessions as we have much more to talk about going forward. Thank you.